All right, guys, welcome back to We Talk Money. The Fed actually just had their announcement, and it was a big nothing burger. And looks like the Fed has paused. Bitcoin's holding up. Some altcoins are breaking out, believe it or not. We might be going into what we call popcorn season, which is where we see alts start to catch a bid after Bitcoin popped, which I was warning about several weeks ago. And we've got a whole bunch of macro stuff. We're smack dab in the middle of earnings season, or I guess we're kind of moving through it. What are the big things that you guys think people need to know? Go.
I think the next 6 to 12 months are all going to be about the economy, at least in stock markets. We're going to be looking for signs that the economy is rolling over. This whole debate about can the Fed softly land the economy is going to become a louder and louder debate because it looks like central banks are finally on pause for good. The Euro Central Bank paused. The Fed has now paused for 2 meetings in a row. Frankly, we think the inflation numbers will basically allow them to stay where they are now for the foreseeable future, if not cut rates in 2024. So really then the question turns to, have they already done too much? Is the economy going to roll over, or will they achieve the soft landing? And TBD on that, but stocks last week made it look like they're worried about possible recession and that the Fed has done too much. Maybe a little bit of a bounce this week. We'll see if it continues. But I do share some concerns out there about, the state of things, and a lot of the corporate executives apparently do too.
It is interesting seeing the price action in the S&P right now. I mean, we are kind of having a nice bounce over these past few trading sessions, so much so that we're breaking back above the 4,200 zone in the S&P 500 index. So I don't know. I this price action, it's not giving us too much clarity yet, but I think that it is interesting to see how pessimistic things felt last week and how things are kind of turning, even though guidance from a lot of corporations has kind of been weak and not really impressing a lot of investors. So the confusion continues. This could just be a relief reversal after, a couple weeks of selling, but it is definitely something to note that the market seems to be pretty content this week and kind of putting on more risk in the face of the Fed stopping rate hikes.
Yeah, we're kind of at a do or die zone right now. We're actually testing the 200 period moving average as resistance now. Also the pivot low from early October around 42.60. So yeah, as of right now today, we are back into, after a 3 or 4 day bounce, back into strong resistance on the indices. And we'll also talk about Bitcoin. It's actually been holding up since the last show last week. We've got a little bit of a bull flag here around 35K, and we're seeing a pullback in Bitcoin dominance, which means that alts have been gaining on Bitcoin over the past couple of weeks. And as we talked about a couple of weeks ago, that's usually how the capital flow goes. Is step one, you get a pop in Bitcoin, prices go up in Bitcoin. As people start to take profit in Bitcoin, they sell, and some of that capital flows into altcoins. And we've seen that happening this week on stuff like Solana, which had a big breakout over the past 4 days. Even, some of the old school coins are starting to pop, Uniswap, Aave, stuff like that. Gaming even getting a little bit of a kick. But yeah, before we dive into any more charts in detail, I want to just talk about kind of the big picture and where we are right now, because there is kind of not a confusing view. Maybe it is confusing, but
it is.
Yeah. So we've got a mixed bag with earnings. We've got the Fed that paused rates. Yeah, people are just, I guess, trying to figure out where we are in this kind of purgatory. Do you guys want to talk about, I've got a few links here that you guys brought up for earnings and how things have been turning out there? Oh, Trav, we
Can you hear Trav?
Lost your audio.
Okay, I was like, is this me? Hey, there he is.
I had the old mute button on.
Oh, shucks.
Yeah, so the theme of this earnings season has been one where the Q3 earnings actually look pretty good. In fact, with about 2/3 of the S&P 500 reporting, we do have pretty solid, roughly 5% earnings growth in aggregate. And yet the stock reactions have been pretty negative on average. I pulled some data last week after the full week of reporting. Last week, we saw that the median return of stocks that had reported earnings last week was about negative 1.3%. Now, we could see that shift this week, of course. We do have a little bit of a rally here, but through at least, about 65% of the earnings season for the S&P 500, stock performance wasn't great. A lot of that has to do with forward guidance. A lot of corporate executives are saying that they are a little bit cautious. They're seeing the consumer get more cautious. They're seeing especially lower income consumers pulling back already. And so they are starting to give guidance for Q4 that looks a little bit weaker relative to what we just saw in Q3. And so that's why the stocks aren't really following through. That's one of the reasons. However, I think it is worth pointing out that, earnings did flip from being negative at the beginning of the year to actually being positive and growing positively here in the third quarter. So that is a positive. The real question is now, are the lagged effects of monetary policy going to create a pressure on corporate earnings going into 2024? And that's why things are so confusing. We're trying to grapple with the conditions that look okay in the current environment versus what it's going to look like 3-6 months out. And that looks a lot more murky.
What's also weird is the fact that housing prices are actually up. So this was this week we had home price index and all that good stuff come out, and prices are actually at their highest levels ever. Isn't that strange? Rates actually were launched again today, and they're still up in the high 7s or low 8s, depending on what you qualify for. But we take a look at the housing index, the housing price index has actually made a new all-time high. So because of the weird supply situation, sure, nobody can afford the payment right now with the interest rates where they are, but nobody's also selling. So prices just continue to click higher. What do you guys make of that?
We have seen in some of the local markets, like here in Austin, for instance, we have seen prices pull back a few percentage points. So it's not true that they're up everywhere.
Mhm.
In the markets that were hottest over the past couple of years, I think we are seeing a pullback in prices, at least a modest one, but certainly not as much pullback in prices as you would have expected given the move in mortgage rates. Now, again, I think this could be seasonal effects. It could be still we need to see the effects of monetary policy still flow through, because as we go into a worse seasonal period, we are going to have some transactions still happening for people that have to move, et cetera. So I do think there's still risk that we could see home price declines. We just got the numbers for August, so that data is a little bit stale anyway. We're here now, of course, in November now, so we have to see what it's going to look like here in the late third and early fourth quarters. I think we could see slightly different picture. But yeah, we can see the volume of existing home sale transactions still continues to decline. And so that to me looks like it will probably pressure prices at some point unless we do get rate cuts in 2024. But I know people have different opinions of that, but that's kind of how I see it.
Can you imagine rate cuts right now in this housing market with prices already high? Can you freaking imagine that? My
Yeah,
God.
I do think it could be interesting though, because we could see more supply come on if rates get cut. I know talking to people in the market, talking to my own agent, that we do have a situation where a lot of supply is not coming online because sellers don't want to put their homes on the market in the current environment. They know it's more of a buyer's market, and so that supply, we may actually have more of a supply response if we do get into a better lower rate mortgage rate environment. So I don't know. It's not simple to exactly know what will happen, but presumably we could actually get more supply if we do have lower mortgage rates and at least a market that normalizes. But there are arguments out there, of course, that if we do get rate cuts, that people are just going to flood back
People
into
will
the housing
flood.
market. Yeah.
And we're back to people having bidding wars and stuff like that. I don't know. Yeah, that's a tricky one. But essentially, this is the nightmare housing scenario. Like we've talked about before, with high interest rates, high prices, it's affordability issues. It's just like, it'd be nice to see it ease up a bit. In certain markets it is, but definitely still affordability is a huge issue.
Mm-hmm. We've got some questions that came in. You guys want to jump into that?
Yeah.
Absolutely.
Okay. Liam was asking, Guys, at what point do you each, quote unquote, hang it up when it comes to trading and investing? Or do you ever hang it up and you just trade and invest with a longer and longer time horizon? So I guess the question is like, when do you retire? That's how I took that. What do you guys think?
I took it as, I can see it as retiring, but I can also see it as like if a strategy isn't working. I'm not quite sure which way he meant that.
Mm. Yeah, well, I guess, yeah, there's a couple ways that could go. It's like if a strategy is no longer profitable and then you just stop trading and you just hold for a long time, maybe that has to do with the article that I wrote in the Daily Doe talking about return on time, because I know a lot of active day traders run into this where they're putting 40, 50, 60 hours a week into trading, and then after a couple of years they're like, wow, I really haven't got a return. My hourly rate is less than working at McDonald's. At that
Yeah.
point, yeah, you've got to make a change. And it's funny, we actually got a second question, which I thought was related to this, but they said, how important is it for you to reach a goal of being a billionaire? Or is it not about the dollar amount and just the chase or the hunt or the drive for the next big trade as the quote unquote game that you play? Yeah, I mean, I think they kind of answered that for me, at least, is like, it's about the game. Obviously, the bigger the numbers get, the more exciting it is and the more cool shit you can do. But I don't know. I don't have a billionaire target in mind. I don't care necessarily if I hit that arbitrary number. For me, it's just about being able to play this game and live my perfect average day for as long as possible.
I actually tweeted about this this past week, basically talking about, and we'll use it in the context of, hang it up, meaning retiring because you don't really need to work anymore or whatever. And basically, it was a survey of people at different net worth levels, a million, 5 million, 10 million, 20 million plus. And it was like, how much net worth will you want to be satisfied and feel good about, what you're doing? And my takeaway from that is net worth satisfaction is a moving target. It's it's based on two things. The first thing is lifestyle creep. That's my number one thing. It's like we all get to a certain level with our lifestyle after we make a certain amount of money, and we fight like hell to keep it because it's nice to have the finer things in life, right? You get a taste of the finer things, you want to keep them, you work to kind of keep that lifestyle up for most people. The second thing that kind of dictates hanging it up or not hanging it up is the addiction to success. You either have an addiction to success or you don't. There's a reason that billionaires keep working. There's a reason that, billionaire hedge fund investors and, multi-deca millionaire hedge fund investors keep trading and they keep staying engaged in the markets, is because they love the game of the market and they love winning and they love success.
Mm-hmm.
So I think for us, like asking the question to us, we probably are all in that boat of, we are addicted to, I don't want to call it a game, but we're addicted to the game and the success, that like that's we enjoy it. We enjoy the process, so to speak.
100%.
Does that make
100% on my
sense?
end. It does.
Like we
It
love the
does.
markets. Like we open our charts every morning and we're like, yeah, like we could be billionaires and still be wanting to do that. I feel.
Absolutely. And it might shift a little bit the way that we'd actually, go about managing our investments and our trades and what we invest in and how we go about it. But yeah, for me, I don't think I could see myself not participating in investing. I hope when I'm 80, 90 years old, I'm sitting there reading the Wall Street Journal or whatever we have at that point and doing stock research and, figuring out what stocks I want to buy. But I do think there are also obviously changes you make as you get older, especially for people who, are not in deca millionaire status or billionaire status. You're going to actually want to shift your portfolio allocations and change the style of investing you do as you get to your later years in life to, be able to maybe focus more on safety and income over capital appreciation. That's,
Yeah. That's the point I wanted to make, is I think there's a few different categories, right? You have like aggressive, like accumulation mode or growth mode. And then you have like more of the protection mode where you're like, yeah, I don't want to have a 50% drawdown. Where if you're starting with, 10 or 20 grand, it's like, yeah, I could wipe that out and make that back pretty easily and take some big bets, and maybe a home run pays off or not. But the larger my account size gets, the more I'm like, yeah, a 50, 60, 70% drawdown hurts like hell.
Yeah. Yeah. The strategy is going to change as you go through different life stages for sure. And I used to day trade all the time, every day, every single day I was day trading. And now I'm like, I don't want to do that every single day. And I find that the less I trade, the more money I make. So that kind of, your strategy changes as you go along. You're not hanging it up. You're just changing things to fit your lifestyle and what makes you happy. The more money you make, you can do that.
Well said.
And I pulled a bunch of questions from Reddit. I stalk a bunch of these financial subreddits, everything from poverty finance to adulting to fat fire, chubby fire. There's so many, and there's a lot of really good questions that get asked. And most of the time I look at the comments and the answers and I say, wow, people are really missing the boat. Every now and then I see one where I'm like, wow, somebody really knows their stuff. But a lot of times it kind of feels like the blind leading the blind. So I pulled some questions from the full range that I thought were really good, from people that were struggling financially all the way up to people that are having questions about buying, airplanes and stuff like that. So wanted to hit a few of these that I thought people would get a lot of value from. The first one, we'll start like on the poorer side, was somebody saying, how do you afford your house? I don't understand how many people afford these houses that are over 400K. I can barely afford my $1,500 rent and I make $65,000 a year. And then they were asking, do you have a home worth over 400K? How much is it worth? What's your income? How do you afford it? And I would say, yeah, way long ago in the first housing boom, I was in the mortgage business and I worked for a couple of the largest home builders in the US, and I did thousands and thousands of loans. And so I've seen every situation you can imagine. And I can tell you, a $400,000 house on a 65K a year income is very, very difficult to make work. Let's take a look at the numbers here. If you have a $400,000 home, and let's just say that you can afford a 20% down payment, that's still a mortgage of $320K. At today's rates of 8% with a 30-year loan, and let's say, $10K a year in property taxes and a couple $1,000 a year with homeowners insurance, that's going to put you around $3,300 to $3,500 a month as your mortgage payment. And if you're making 65K before taxes, that's only about $5,400 a month in gross income. So you're looking at, basically paying well over 50% of your net income to a mortgage. You probably can't qualify for that mortgage. And even if you figure out a way to get a no income loan or a no income verification loan or something like that, you're not going to be able to afford it. I mean, who can live off of that? So I think it makes sense to focus on getting a debt to income ratio below 20%, preferably 10%. I know that's a pie in the sky for a lot of people, but what that does is it gives you a lot more room to be able to save and invest. You guys have anything to add to that?
I think that in today's environment, that situation just requires a dual income household. You'd have to have two people, two salaries to really make that $400,000 house work and be under the right housing payment ratio, which 30% basically, if you do your housing payment divided by your income, your gross income, in that case, that's about where we want to be, is 30%. And a lot of people are stretching to be way too high in terms of what their payment is in relation to their income. So yeah, you'd need a roommate, you'd need a partner in the home to help you pay the bills. And that is the unfortunate situation that a lot of people are finding themselves in. And I think that these people need to not look at renting as a bad thing.
Mm-hmm.
And then in this situation for this person, renting a home is actually going to benefit them because they can take that extra income that they have, and instead of trying to push it to a mortgage that's stretching them way too thin, they can invest it, in something passive like the stock market. So don't let that get you down. Too many people are too upset about having to rent right now. Wait till the environment is right that aligns with your finances.
Yeah, and I mean, I think the other thing that I'd add is that we've said it before, but there's a lot of people out there that have very different circumstances, and so when you think about who's buying a $500,000 home or more, these are people that probably are making 300 grand a year at a FANG, or they have significant family capital. Maybe they've even been gifted a house. Certainly, a lot of the people that own very high dollar worth homes in places like California and other places probably bought those 30 years ago. And so they were, they weren't buying them at $1 million plus or $2 million plus prices. So there's a lot of factors like that that go into this. So when you see, and it feels like, everybody out there is, somehow doing something that doesn't make sense mathematically, you got to remember some of those other things and some of those other drivers. And yeah, there are a surprisingly large amount of millionaires out there in the world too. And especially in high cost locations around the coasts and around major cities, you're going to find a lot of those people. So don't try to feel like you have to keep up with them if you're not in that category yet.
Yep. Next question was one on the other end of the spectrum. It was somebody in the Fat Fire subreddit that was talking about their daughter who was upset that she didn't have a birthday party as fancy as the other kids. I thought this would be a good one for parents and non-parents, just to kind of explore this idea of like, when you make a lot of money, if you're sitting pretty and you're trying to keep your kids somewhat humble, but you also want to give them a great life. Like, how do you find that balance? And so the situation was this, I'm going to paraphrase, but he said, I'm struggling with teaching my kids the value of money and gratitude in an environment where their peers often experience extravagant lifestyles. Despite my efforts to provide meaningful but budget-conscious experiences, my 5-year-old daughter was disappointed with her relatively modest birthday party. She compared it to a recent extravagant party that we attended, which left her feeling like her celebration was inadequate. Boys emphasize the importance of experiences over material things, but it's challenging when societal norms and peer expectations contradict these values. So how do parents in affluent communities navigate this issue, especially when materialism becomes more prevalent as kids grow up?
Wow.
That's
I don't
a
think
lot.
that, yeah, I don't think that one has an easy answer necessarily, but
I have thoughts.
yeah,
Go for it.
give it to us.
So I am not a parent, but I did grow up being the kid that didn't have what all the other kids had. So I, as I've kind of gone through life, what I think if I had kids I would do, and what I parents that have done this is, first of all, introduce charitable giving to your kids when they're young. Find out what's important to them, and basically teach philanthropy to them and giving back, and choosing whatever charity their kid maybe it's a dog rescue or something like that, or helping kids with cancer, whatever it might be. But like, show them that what giving looks like, that there are people out there that have less than us and they don't have, what we have, or they're in bad situations, and kind of giving back to those communities, and helping with that. Now, the other thing that I think is very helpful is, and this may not be feasible, but traveling the world, going to take your kids to other countries that, are much different than the US, where kids have much different lives than, affluent children, and just show them the world, show them how everything is, and give them an appreciation for what they do have. Um, and there's probably a lot of working with your kid. I don't know, because I don't have a kid, but if I had to guess, I would say there's a lot of instilling your own values in your children, which takes time. It's not going to happen overnight, and it's just something you have to keep working at. teach them the value of a dollar via chores, get them a green light, bank account or a custodial account, something where they can earn money and put the money in and watch it grow. These are just a few things that could help, but that battle of comparison for your child is probably always going to be there. And I only am saying that from my own experience as a child in that situation. But I didn't grow up in an affluent community, but it's kind of the same idea, right? You look at others that have more than you and you don't understand why that is. And so those are my thoughts.
Yeah, we actually had a member in the community today actually post in our Discord. He said, we recently had a baby boy and I'm looking for some resources on the best long-term saving strategies for kids. So it's good that, people are, I think, more conscious about this today. And growing up as a military brat, I was around people that were all kind of the same socioeconomic class. Like we weren't rich, but we weren't poor. And I think we all just ended up having a great time. We didn't really think too much about material things, but whenever I lived like in Korea, we definitely knew on the other side of the fence, those kids didn't have the same thing we had. So there was like a gratitude that came with that. Trav, how are you thinking about this? How are you going to raise your kids? Are you going to spoil them? Are you going to give them everything they want? How are you thinking about this?
Yeah, that's really tough. I think Nikki made a lot of great points. I think we're going to do our best. Like, I think at some level, there's going to be things we're not going to be able to control as to what they perceive and how they feel and that, FOMO that they feel. But yeah, I think really trying to get them into things early enough that sort of instill like an understanding of what's realistic in this world, for most people. So yeah, things like Nikki said, like taking them to do volunteer projects in underserved communities, doing things like maybe actually having them work and do jobs when they're, younger teens or, mid-teens, actually having them feel what it feels like to work those jobs where maybe, as a waiter or whatever it may be, a supermarket checkout clerk or something like that. I did a bunch of those jobs myself. And I think it helps you to understand like what jobs like that are like, what trading, time for money is like, and also how to deal with, people generally. So I think a lot of those things can help. And yeah, you're going to want to like, my philosophy is your heartstrings are going to pull at you and want you to give your kid everything everything that they want. But you can also see the examples where, the parents that did that, it typically didn't turn out well. So you've got to have some restraint. And as a parent, you're not going to be their best friend. You're not going to give them everything they want. And you're just going to have to like understand that sometimes you're going to have to be the bad guy. But for the long-term development of your kids, like that's going to be, a positive, hopefully. So yeah, I mean, you do what you can. I don't have it figured out yet. But definitely in the comments, let us know, like if you've got some strategies that you think are particularly effective.
Yep. I'm sure there's other people that have been through this.
Oh yeah.
All right. So next question is one I thought was interesting. This is somebody who is saying that their net worth is stagnated. So here's the situation. Mid-40s, current net worth, 5 million, excluding equity and their primary residence, 2 kids, household income of $700K, high cost of living area, primary home is 1.7 million. A lot of details here, but the question is, our net worth has stagnated at this level for the last couple of years. And he says, maybe the stock market is to blame, question mark. Even if I assume an 8% return on the current net worth, it should add 400K, but I don't see that happening. So it's like a lot of people that I guess don't watch the markets on a regular basis. They're looking at their, Mint or whatever website they're using to like track net worth. And they're like, wow, it's just not going up. And then this person's asking, what worked for some of you to put your money to work more? Not asking for your formula to copy, but what else can I do? Right? This is a question we get a lot in the community, is like, hey, how do I grow my wealth in the most effective way?
Yeah. I'd be curious to know the allocation. What is the allocation? Is it stocks? It sounds like he's guessing that it is.
So
but
concentrated portfolio, 2.6 million of that 5 is in 3 stocks: Microsoft, Amazon, and Google.
Ah.
So hyper concentrated, has a large primary residence, and has another 1.5 million in private equity, other stocks, a real estate syndication, and a 529 plan.
Well, we have to think about the past 2 years because he said it's stagnated over the past few years, and we have to think about what's happened over the past few years. 2022, we were in a bear market, right? So net worth went up in 2021 significantly for a lot of people across the board. 2022, we had a nice little drawdown of net worth, and as we were in a bear market in stocks, and including the tech stocks as well. And then 2023 has kind of been a continuation of that. So I can see how somebody would look back at the past couple of years and say net worth has stagnated in that.
Yeah. And hold on here. This is interesting because he's like talking about the 8% average annual return of the market, but they have a hyper concentrated portfolio in 3 stocks. So
Right.
they shouldn't expect to get the return of the overall market. Certainly not with the same level of volatility. I mean, you own 3 stocks. You don't own the S&P 500, So that right there is a mismatch. But I mean, yeah, 2 of those 3 large tech stocks are down in the past 2 years. Even with the recovery this year, they're still not back to where they were, 24 months ago. So that's a big part of it.
Even if you just look at like the New York Thing index of the top 10, tech stocks, that is basically flat over the past couple of years.
Yeah.
So that makes
explains
sense.
a lot, right?
Yeah. And I think they're over extrapolating. They're taking the results of a very volatile and choppy 2 years and extrapolating it far into the future. I mean, that's a little silly. So not to pick on them too much, but come on, man. Like, and if you really are thinking about the longer game and you also have to understand you're not earning 8% every year. Like the market gives you that performance in chunks, and like 75% of the time the market will be positive, but 25% of the time, on average, even the S&P 500 is down. And if you look at it on an individual stock basis, it's going to be even more dramatic. So, yeah, I mean, I think some expectation setting and some looking at the data might actually help them here.
But I think that a lot of people make that mistake. They look way too short term on it and don't realize that when we're talking about those returns, it's over a long period of time.
Right.
Yeah. Right now, though, you can go get 5% 2-year bonds and, earn a guaranteed 5% for 2 years. So that may be an answer for them if they want to make sure that they're getting some return.
And one thing I was going to add is when the market is in these time periods where things are flat to down, I tend to kick up my focus not on holding investments, but either A, looking for new entries as things are down, or B, focusing on increasing cash flow to stick into the markets. That way you can like hyper grow when things do start to go up. So there's time periods where I'm focused on entries, active trading. There's time periods where I'm focused on sitting on my hands, letting things ride. There's time periods where I'm focused on harvesting profits and then diversifying or pulling, money out of the markets into other stuff. So there's always a season to the market. And if you just expect things to be linear 8%, like you guys said, I mean, that's just unrealistic. And if you can better ebb and flow with the markets, that's going to help you get, I think, a better return over the long run.
I think that this person has obviously done a good job in life, right? Like they've accumulated a lot of wealth. So I think a good strategy for them is to kind of take a step back and look at what is your growth rate, your over the past 10 years or 5 years, right? 7 years, something like that. Like pull back a little bit and find out how you've been compounding over a longer time frame to see how truly well you've actually been doing. You may pull back and find that, you're having a CAGR of a double-digit CAGR that's beating the market, maybe not, right? And then you can kind of gauge off of that. And also you can use that to decide if it's time to get some concentration risk off of the table, because having your wealth in 3 tech stocks is something that needs to be managed very, very well, very, very carefully. So I think that pull back, look at the long-term trend, to determine how well you're truly doing? And then how can we change the investing strategy so that maybe you can start to have some of your wealth align more with the, index returns
Well
if
said.
you're
All right.
afraid of losing it or whatever.
Okay, we've got a 22-year-old kid who got a $2 million inheritance, lives in not a third world country, but outside of the US, and a low cost of living area. Says, I started a business with my friends, but I'm already at fire. He can fire in his early 20s. But he said, I suddenly lost all motivation to spend effort on anything since it feels like it'll take forever to surpass the amount that's been given to me. Honestly, just really feel lost, and that my life is, just lost motivation. Going to work feels like a slog. And I know a lot of people will get pissed off by this and say that I'm extremely privileged and I have this problem, but I just want some advice and guidance from people who have been in the same situation. Yeah, I mean, a lot of people, when you don't have money, you look at this and you say, yeah, man, wow, what an idiot. He just got a bunch of money and he's feeling, empty inside. But people that have had a windfall know that this is actually very common, especially if you haven't earned it. People that win the lottery, people that get an inheritance. There's a reason why a large majority of those people end up losing all or most of that money in a pretty short period of time. So, kudos for this guy for being honest about it and recognize the benefit and be grateful that your life is basically covered. You don't have to worry, and maybe use this as an opportunity where you can step back and reevaluate and think about, what am I really passionate about? And it sounds like the business that he's working on, he's not truly inspired by or motivated to do. So maybe it's the wrong type of work. Maybe you can find something that does give you more fulfillment. And maybe in the short term, you can take a sabbatical. I know I've done that a few times in my career. It's take a year or 18 months where, you just reevaluate, you make some maybe big changes in location or with what your perfect average day looks like. And maybe even define that if you haven't. What does your perfect average day mean to you when you wake up every day? What do you think, would be an average day that just gives you the most fulfillment? Anything to add to that?
I would say go try a bunch of stuff too. Go try out a bunch of things, that either work or just hobbies or pursuits where you're chasing, getting better at something, or maybe something that challenges you. Find something that gives you that fire, that gives you that desire to get up in the morning, because, luckily, like you said, Chris, like this guy has, things pretty well set for himself. So that's an amazing opportunity to go out and do whatever in the world you want. And surely there's something out there in the big, broad world that is going to excite you. So just go try a lot of things. And, that would be, I think, where I would start.
Anything to
add? I think you guys nailed it. The key is he's got flexibility now to be able to change his life in a really good way. And that's what the money does. It gives him some breathing room. He doesn't have to stop working. He can still continue to make money. It's just like you guys said, finding what really, gets you out of bed and excited in the morning.
Yep. Okay, let's do one more poverty one, and then we can move back into the charts. My husband doesn't know how to be poor. Okay, so this is a lady explaining that she set a budget and she's very responsible. She goes, I guess her husband is not financially responsible. She goes, this week I paid the bills and I told him we have $200 left for groceries and gas for the week. He says he needs to put $50 in his truck for gas, leaving us with $150 for groceries. It's not a great amount, but it's doable. He then asks if he can get a case of Red Bull for $30 at Costco. I was speechless. And I said, I'm concerned that you don't comprehend the difference between a want and a need. And so he throws a fit and says that he'll just eat peanut butter and jelly for every meal. So she goes on to call him a child. And, this looks like a pretty nasty situation. And I believe the number one cause of divorce today is still money. So
that's why I'm divorced.
Yeah.
This sounds so This sounds pretty familiar to me. This sounds a lot like my childhood. Um, yeah, that's tough one, man. It goes back to goals. It goes back to when you have two people that have different spending habits and saving habits, it can be a challenge. And that's why you have to bring it back to, okay, honey, what is your goal? What are you trying to accomplish? Okay, what am I trying to accomplish? And then take it and bring it together. And, you always have to be working towards something to stay on the same page and in alignment. If not, yeah, you're just going to spend it and you're not going to be, what are you working towards, right? Like, unless you're working towards something, it's kind of difficult to get somebody who likes to spend to not spend. And that is a very challenging situation. Sometimes it takes financial therapy to get people to change those types of habits. And a lot of that comes from how they grew up, or how they were raised or what they saw in their house.
And
So,
I know we don't agree with everything that Dave Ramsey says, but this is where I think he is helpful is people that have really no financial education and are dealing with really, really tight financial constraints. She says people say we need counseling, but with what money? Marriage counseling isn't free. And that's true. But there is a lot of free information online. And if you guys, put your adult caps on and really think through this and make sure that you are on the same page and do have the same goals. Otherwise, yeah, it sounds like divorce is very likely in this
well,
situation.
she needs to find out if he's willing to change, if he's willing to do the work. Because if he's
Mhm.
not, then he's not. But if he is, then there's, hope there. And she can help teach him, why I'm doing this. Here's why.
Yep. Trav, anything to add?
No, you covered it. That's a tough situation.
A rough one. Yep.
They do say that who you marry is one of the biggest and best, like, financial decisions. Like,
It's true.
basically, who you marry will dictate what happens with your finances. And I kind of believe it because I've seen it, many, many times over. So,
Mhm.
Yeah.
Yeah. I mean, it can either ruin you or it can give you the best boost and motivation. If you have someone on your team that believes in what you're doing and you're on the same page, I mean, it's kind of like having an unstoppable force. But if you're on different pages, man, it's going to end in heartbreak and a lot of bad stuff.
yeah.
Yeah. All right. Let's get back into the charts. I know we've got a few more things on the docket. I just thought those were some pretty powerful questions. Hopefully, it added some value. If you guys want to hear more of that, let us know. And if you have any specific questions, feel free to submit it and we'll cover it. But we've seen some carnage in a few of the sectors that I wanted to bring up. And Trav, you wrote about this in the Daily Doe about airlines and travel. And I just wanted to ask, are there any sectors that are getting at such deep levels that they're becoming really juicy, or are we still kind of stuck in that purgatory zone where we're not overbought but we're not oversold? I know a few things that you mentioned here in the notes were airlines, solar, biotech, med tech. Are there anything that you guys are really excited about?
It's really hard to get excited about airlines just because they're bad long-term investments generally. Warren
Yeah.
Buffett has had some great quotes about that over time. But man, the carnage in that sector is kind of shocking. Just in the past 3 months, I looked at the U.S. airline sector, 9 or 10 stocks total, and every single one of them is down over the past 90 days. And in fact, like the median return in the past 90 days is basically negative 35%. And some of those stocks are down even more. So it's just been like total brutal
Man.
carnage in airline stocks. A lot of them, especially the low cost carriers, the interesting part about all this is that the passenger traffic numbers are still pretty good. Like the US passenger traffic, even though the domestic side has weakened a little bit versus, where it was earlier in the year, it's still growing double-digit rates over pre-pandemic levels and over last year. So it's not like the passenger numbers are falling off a cliff. It's just that a lot of these low-cost airlines really expanded over the past couple of years as they, we're seeing demand recover from COVID. And so there's just a lot of competition. Fares are coming down. You also have margins getting pressured by jet fuel prices. And you have some other one-off issues as well, some engine issues with some of these airlines. So it's been wild to see how fast these have come down. Even the bigger airlines like Delta, American, those are still making money in the current environment, but even those stocks have been hammered down to single-digit earnings multiples. So I think there could be some opportunities there. Again, I don't love airlines for like a buy and hold long-term investment. There's just a lot of ways to lose, but I do think we've gotten to some oversold levels on some of these, and I think there could be some trading opportunities. I also wrote about in the Daily Doe. I won't go into it in detail here, but there's an interesting merger arbitrage situation with Spirit Airlines, which is being acquired, or there's an attempt of JetBlue to acquire Spirit. And right now the DOJ is suing to try to stop that acquisition. But if the acquisition goes through, then JetBlue will be buying Spirit Airlines stock for like around $31 a share versus it today trading at like $12 a share or under $12 a share. So it's a huge merger arbitrage.
Wow.
Yep. So arguments started this week in that trial, and it's expected to wrap up sometime in December with a decision either in late December or early January. So very, very interesting situation. But yeah, could be very lucrative trading opportunities in that one for sure, if you're willing to stomach the risk of the merger arbitrage.
Yeah, I mean, even looking at, charts like Delta down almost 40% from a pivot high here in July, it's back at multi-year support. So yeah, there's definitely some volatile trading opportunities in there, it looks like.
Yep, absolutely. And we've got a number of other sectors you mentioned too briefly, like solar, medical tech stocks that have also been pretty heavily brutalized. Regional banks, some of the biotech's been a really awful place where a lot of stocks are down. So there's just a lot of pockets of the market where, everything has just been indiscriminately sold lately. And so, when you get a lot of forced selling and a lot of sellers piling on, that eventually that will create some opportunities. And so right now I'm kind of focused on finding companies where, there's actually really good cash flow yields, like they're profitable. They're, basically trading for low enough multiples that, you can justify it even versus say buying bonds and things like that. So that's the group of stocks that I'm really focused on at the moment. But I do think, the market's opening up opportunities in a lot of areas.
Awesome. Well, looks like we've got opportunities in stocks. We've also got crypto, which is in popcorn season. I'll just pull up a couple more quick charts here. We've got Ethereum, which is back above all three of its moving averages, the 50, 100, and 200. We've got a lot of legacy large cap that's starting to move. And it's also trickling down into smaller cap. Even gaming is starting to pick up a little bit of momentum today, and really this week in general. But things have been so beat for the past, just several months that this is like the first sign of life. And we're not out of the woods yet, right? We've still got a very aggressive regulatory situation. The FTX case continues and looks to be reaching maybe a conclusion here in the near future. But yeah, we'll see. I mean, there's still a lot of expectations of a Bitcoin spot ETF, which we've been talking a lot about over the past several months. So we'll continue to monitor that. But other than that, it's really just kind of a wait and see on the Bitcoin chart right now. I mean, we've got 35K. We've got a bull flag into that zone, just seeing what happens next.
Can we take note of how impressive that consolidation is on Bitcoin right up here? I mean, I thought for sure we were coming back down to see a retest, basically, of that breakout zone. But it is impressively holding up here.
Mm-hmm.
I've been kind of surprised. I don't know about you, but I have been.
Yeah, I mean, the 32K break was a really big move, and bulls have just been defending. So, I mean, anything could happen, right? I mean, the stocks could pull back tomorrow and Bitcoin could go with it. But as we talked about last week, I mean, there was an inverse correlation there on this run up, and it looks to be holding strength. So,
I'd
yeah,
say
it's
the
definitely
bulls,
impressive.
yeah, the bulls seem to have control for now.
Mm-hmm. Yep. Cool. Well, anything else you guys are looking at for the next week or so?
We do have a big unemployment report coming out on Friday, and a lot more earnings this week we're still looking to dive into. So those are the big ones on our side on stocks.
We got
Awesome.
Apple this week, which is a big bellwether, of course.
Yep.
So we'll be watching that. And
Yeah,
I think
when
that's
is
like the
Apple?
last of the big ones, right? I think
Yeah.
Apple's the
Today or
last.
tomorrow?
Tomorrow after market close.
Thursday.
Yeah.
Okay, cool.
Yeah.
All right. Well, we can go ahead and start to wrap it up there, guys. We're doing a live class next week, but we will email everybody about that. What else is going on? We're going into the holiday season, so we'll see how the markets start to behave prior to Thanksgiving and into the Christmas kind of end of year celebration season. And yeah, I think that's
we'll
it.
link up the webinar in the show notes so people can register for the free class.
Yeah.
Yep. Sounds good. All right, guys. Well, don't forget to go to wetalkmoney.com, leave us a question for the show, and check out our wealth building community, wetalkmoney.com/community. And if you love the show, go ahead and leave us a review on any of your favorite podcast platforms. Make sure you're subscribed to the still relatively new YouTube channel. I know a lot of people are still over on my channel and our individual channels, but we do have a dedicated We Talk Money YouTube channel there. So make sure you're subbed, and we'll see you guys next week. Take care.
Cheers.